Good morning. Happy Sunday, or not so happy Sunday, guys. We've had a pullback in the markets, and it's always crazy when we get a pullback in the markets. Retail that are coming in on the back of the pumps. When we get a pullback, they're all in a loss. That's what hurts, guys. That's what causes people with weak hands that have just come into crypto to sell at lower levels in a loss. So we're looking at the charts today, guys, or we're looking at the bubbles, and you can see that there's not many runners there. I've gone through the charts this morning. I've ended up with this virtuals protocol. So we've started off, guys, with nothing on the chart. And what we're going to do is we're going to build in our support. We're going to build in our resistance. We're going to look at what Bitcoin needs to do. And I'm going to show you exactly why I like virtuals and how I'm playing the next move. Okay, firstly, I'm Keith. This is the Crypto Bullseye channel. You can follow me on X. You can follow me on Discord, guys. We've got a group there of like-minded people, and we're all aiming and striving towards the same thing. Getting rid of that 9 to 5, guys. We've all got the same goals. We've all got the same thoughts, and we've all got the same beliefs in crypto and outside of our monetary system, guys. But it's not as easy as just aping into high risk, because that high risk can absolutely wreck you. So understanding risk diversification, understanding portfolio management, understanding exactly when you're wrong and how to prepare for when you're wrong, and preserving your capital to live to fight another day is one of the most powerful tools that you will ever learn. Self-develop yourself, guys. I'm not going to give you calls. I'll show you exactly what I'm doing. But ultimately, the aim of the game and what I'm trying to do is to show you guys, to show you how to read a price chart, how to understand when something's fair value. I'm not going to be here forever. I want you to be able to do it yourself. And that's what this community is about. So if you do want to be a part of it, guys, 9,284. Big thank you to each and every single one of you that believe in me. I don't ask you for money. Get yourself in the Discord group. That's completely free. Don't ask you for money. So let's get on to virtual, guys, because we do know and we do understand, like I mentioned, the macro. As far as the macro is concerned, there's a few things going on. That's creating fear, panic, uncertainty within the market. And when you get fear, panic, uncertainty in the market, you get a pullback. And we always look to Bitcoin first to find out exactly how far we're going to pull back. Because when Bitcoin pulls back in times of fear, altcoins pull back harder. And high risk, speculative altcoins like virtuals, they'll pull back even harder, guys. But there's a few things that I like about virtuals, and we're going to go through them now. And this is going to be a lesson in TA, guys. So first things first, what tools have I got in here? I've got two tools. The 3MA. Now, this is a powerful tool, guys, moving averages. You've got your 20, you've got your 50, and you've got your 200. Now, look at how price reacts each time that it hits the 200. You can see support, 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 resistance, resistance, support, support. These things hold as support when you're above the 200. They hold as resistance when you're below the 200. Now, we bring the 50 in, we bring the 20 in, and we call this the traffic light system, or I call it the traffic light system. What it means, guys, is you've got your 200, which is green, you've got your 50 period, which is yellow, and you've got your 20 period, which is red. So the 20 period is the faster paced, the 50 period is the mid pace, your 200 is your slow pace moving average, which is your major support or major resistance, depending on whether you're above or below. So how do you get that up, guys? You just go on your indicators and you type in 3MA. Type in 3MA, pull that up, and that's what you get. So you've got your 20, you've got your 50, and you've got your 200. If they're a different color, guys, you can come on there, you can just double click it, go into style, change the color, 20 red, 50 in yellow, and then the 200 in green. So that's that. Now, the aim of the game, why do I call it the traffic light system? What happens, guys, when you've got the green at the bottom, when you're bullish, you've got the green at the bottom, that means price action's above the green, and then the yellow is above the green, and then the red is above the yellow, like a traffic light system, guys. This is what happens to price. This is what happens to price. Now, flip it in reverse, guys, the traffic light system in reverse. When you've got the green at the top, and you've got the yellow in the middle, and you've got the red at the bottom, look what happens. Bearish, bearish, bearish. Now, something's happened. We've just had a golden cross on virtuals. We're holding this 200 as support, and we've also got the 50, which is about to cross over the 200. And if we get a bullish candle that crosses within the next couple of days above the 20, above the 50, we will get the cross and the traffic light system will be in play. Expect higher upside. So the next thing that we're going to do, guys, is we're going to bring in Fibonacci levels. This is simple, and I'm going to show you how to use them simple and effectively. So you've got your Fibonacci, and we're looking at two swings. We're looking for the swing from the upside to the downside to find out how big the retracement is from this swing down to this swing. And we're looking at what rejection points are there, what sticking points are there. And then we're going to do exactly the same thing for the bullish scenario. So this is the bearish. Are we going to get rejected at any key levels? You can see we've been rejected, and we've been rejected at the 38.2% retracement. We've not only been rejected once, we've been rejected several times, several times, several times, several times. 38.2% retracement is going to be the major barrier that we need to overcome in the short term. That is sitting at $2.25 exactly, guys. So $2.25 in the short term. What you can see and what you can appreciate and what you can understand, and I've talked about this in previous videos, is when you get a big volatile swing to the upside, it comes back down as a support band. You get a wick to the upside and it comes back down. Guys, expect that to be a rejection point going forward, exactly like it was here. So we've got double confluence here. That's going to be the next barrier that we need to overcome. In the short term, let's do the next thing, Fibonacci. From this swing here, this is the minor swing. This is the bullish swing. We're looking at key levels again. What have we got to fall back on? We've got the 38.2% retracement here, $1.74. So you can see that we're bolt between the 38.2% retracement from this swing. You take it from the bottom, you put it to the top, 38.2. That's a 38.2% retrace from that previous high. That's holding as support, but you've also got, when you zoom in, the big daddy, the 200 daily moving average. So what that allows for, guys, is that allows for wiggle room. You come into the 200 moving average, you understand that once you break and once you close below the 200 moving average, that means there's a high probability that you're going to get further downside. So what does that do for risk to reward? If this is your risk below the 200, where's your reward? Even if you're shooting for this high here, guys, what does that do? 5.85. What about if you were shooting for the 618? What would that do? 11.69. So when you get close to these support zones, you've got your 38.2, you've got your 200 moving average. This acts as double confluence. That will give you a big support zone. So that makes you understand where your risk lies. Your risk lies below the 200. Where does your reward lie? Depends how greedy you are. There's two ways you can play it, guys. You can go for the previous swing. That's the more conservative. That's the higher probability. Or you can do the clever thing. And as you start making higher highs, as you start making higher lows, each time that you put in a new higher low, take out the previous high, you move your stop loss up. Move your stop loss up. What does that do? Puts you in profit. What happens if you continue the trend? What happens? Put your stop loss up, put your stop loss up until the trend reverses. What happens when the trend reverses? The trend is your friend until the bend at the end, guys, but the trend always ends. So when the trend ends, bam, you're out and you're out in profit. This is where you took your entry. This is where you close your position. So trailing stop losses are a powerful thing, but make sure that you understand your risk. Make sure you understand your reward. Entries, stops, and targets, guys, they're the most important thing, but also understanding exactly what the macro's doing, what Bitcoin's doing, what Ethereum needs to do next. That needs to be the next one to drive the market. We've been talking about that, and you can see Ethereum's just dropped its 200. So where Ethereum's dropped its 200, virtuals is actually holding its 200. So that is showing strength. And that's why I'm showing you virtuals this morning, is because we're pulling back to the 200. That means the risk is limited, the reward is more, and it means you can protect yourself to fight another day, because we don't know what's going to happen going into the next few days, guys. And if we get some kind of uncertainty, we get into the market capitulation or market crash, this could drop the 200. If it drops the 200, then you want to be wrong with the least amount of capital at risk. And that's just a hypothetical scenario. And that's me trying to teach you how to do this on your chart, how to understand when something's fair value. So make sure you subscribe to the channel, guys. Make sure you join the Discord group. Make sure you follow me on X at BULLSEYE for crypto. And I will see you guys in the next one.